Certainly, thanks for having me. So I think this is the most significant OFAC sanctions package which we've seen on what, like you mentioned, shadow fleet, dark fleet, the whole ecosystems, right? Since the start of the conflict, I think we have to understand that access to shipping tonnage has single-handedly facilitated Russian oil flows, right? When we are tracking it, we are seeing close to around 500 vessels which are nearing, or rather, under the sanctions list and dominated by oil tankers. So it's a big package. It's significant, and this will have a material impact in terms of Russian oil flows and including the Iranian oil flows, right? So this is something which I would say the market wasn't prepared for, and that's the reason why we've seen traders scramble to get the tonnage and what we call the compliant ships to keep those cargoes going.
Interesting. I want to discuss all of that in more detail, but before we get there, I just want to show this map that you actually shared with us ahead of the conversation, which basically just shows where vessels are actually located at the moment. And looking at the map, it just seems that we have such a strong concentration of these sanctioned vessels going, say, from Denmark all the way to Asia. Explain to us, what does this traffic is telling us at this stage?
Yeah, so certainly if you look at Russian Arctic as well as the Far East, right? After the cap on the oil Russian flows, we've seen most of these cargoes going to India and China, right? 80% of the cargoes are destined for Far East, right? And they are all coming via what we call the Red Sea and the Suez Canal. And the challenge here is it's not only these OFAC sanctioned vessels, but we monitor close to around 2,000 at-risk vessels, right? So these vessels, and it's very difficult to monitor what we call the price cap, right? So these vessels could be involved in carrying sanctioned crude oil, refined products, and it's very difficult to monitor their loading and discharging, right? Sanctioned geography. So it's the opaque nature of the shipping industry, right? Which has helped Russia put these barrels in the market. But now with India and China having to look elsewhere, this is why we're seeing that impact on the oil prices at the moment.
Interesting. I would also like to go back to one of the points you made earlier in relation to oil tanker rates. Looking at those figures, we're basically 3 times higher in the space of just 2 weeks alone. What is the outlook here, and at what point is this likely to start biting businesses as well?
Yeah, I think there's a saying that shipping industry thrives in chaos, right? And the recent sanctions have led to a spike in rates. I think if you just go back, particularly for rates from Middle East to China, we were around $16,000-$17 just 2 weeks back, right? We're already above $50,000 per day. So there is a change in VLCC trade flow patterns. And we're talking about the very large crude carriers, the big ships, as the Chinese buyers, and we're talking about the teapot refineries, the refineries in Shandong, they start looking elsewhere. So they're looking for barrels from US Gulf, Middle East, West Africa. And what that does is the compliant tonnage, which is sitting outside of the sanctions, becomes lesser, right? So that is the reason traders scrambling to get those vessels. We've seen a huge upsurge in tanker rates. So short term, we do expect these freight rates to be supported, but I think we have to look at shipping slightly different, right? The effectiveness of these measures will depend on how quickly these sanctioned vessels, they can quickly reflag, change ownership, come back into the compliant fleet. Not so easy, but over a period of time, we'll settle in because there's still, I would say, the supply of shipping, which continues to grow.
Before we let you go, I would like to also understand what are your thoughts in relation to the outlook for traffic around the Red Sea, because obviously that has been such an important story for shipping. Now that we actually have a ceasefire in the Middle East, how is that likely to impact trade around the Red Sea region?
I think it's too early to tell. I think we've heard about the ceasefire. We've seen some of the moves. I saw the earlier story as well. But if you look at the war risk premiums, those haven't changed, right? They remain unchanged. As of now, Red Sea is still a pretty difficult situation. And we do not expect the ship owners to hurry back in. I think we're talking about ships, commercial ships being targeted, right? So it will take some time. And when it starts to normalize, I would guess it will be the second half of this year. And that will have a huge impact on freight rates, particularly for the container markets, a severe dent there. And we do expect freight rates to come off across the shipping fleet if the Red Sea opens. But that's not a base case as of today. It's still too early to tell.